Welcome back. My name is Wittmann. If this is your first time, welcome. I am provide DSCR loan to 40 states. Today, I am going to show you the quickly how to underwrite DSCR deal using DSCR deal analyzer that I created. You can download it and link in description. Okay, free by the way. All right, so let's get into it. So for this deal in Modesto, okay, you copy here's the address, year bill. Here's 1974, just to get the idea of your deal. Square feet, the 2125 is right here. That's showing Zillow. This duplex has asking for 519. Okay, we're just typing here interest rate right now. Say 3.5, down payment 20%, assuming you have good credit. Long term is 30 years. Insurance, if you don't know, you can estimate. And then for this point, we just do a quick deal analysis. Is the word for us to pursuing or not? Okay, so here for 4 years 2076, and then the tax rate here. Okay, it's about 1 point. So let's say 6488. Just roughly, you likely have to come back here again. Once you want to submit the offer to verify this number, and no HOA. All right, so duplex here, so 2 units. The income of the duplex in Modesto, you have to know your market. If you don't, you have to have a property management that you can rely on. And I look at these properties for 2 bedroom, 1 bath, 1 unit, and 1 unit, 2 bed, 2 bath. Okay, for this condition, okay, I would say, for first unit 750 and second unit 1850. Assume no other income. Okay. For the 2-1 and the 2-2. 2-1, when I'm saying 2-1 meaning 2 bed, 1 bath, and 2-2 mean 2 bed, 2 bath. Okay. So your income is cover your mortgage in ratio 108. This is what the lender are looking for. You have positive cash flow. But as an investor, you always need to consider your vacancy allowance, property management, all the expenses that you will cover. Even though it's full, you still need to put vacancy allowance, minimum 5%. Property management, if you self-manage, you should also put on. Self-maintenance, this one look like kind of moderate. I would keep 5.5. Others assume like no for now. So here per year, operating expenses is 8,640 on top of mortgage. So minus of your gross income, you net in OI is net operating income 34,560. Cap rate is 6.7, which is not bad for these conditions. So I would say class B minus class C properties. Cash to close for buying roughly about 3%. Rehab, you might not need to put anything or right away. But let's say here that you have opportunities to become a vacant pretty soon if you want to. Let's say you put like 1,500 after that. So now you cash to close, you have to bring in 120 grand to close this deal. Cash to close, your cash flow divide cash to close, so you technically negative, which is cash flow ideal is ideal, okay, but ideally you have to know your market, what's your market and what your goal, what you try to achieve. You want to looking for cash flow property, or you looking for to paper loss to maximize your tax deduction. That also could be your strategy. And rent growth, I would kind of conservative for this one. One expense growth, so probably one the same appreciation. Okay, let's keep that at one. Cost to sell, and when you sell, all the closing costs, mortgage, and everything, broker commissions. So let's say 5. All right, so you come up 5 years. This is what you return. The deal is not too bad at the beginning, but when you add up all the operating expenses as an investor, this might be quite a not appealing deal. Insurance, we don't really have much problem there. In Modesto, earthquake, no. Rent control, not really. Okay, for cap rate, I'm looking for 7 cap, 15 cash on cash. That's kind of my offer strategy. They asking for 519. Okay, per cap rate 7, so I can offer a little bit lower, close to 500. DSCR, you can all the way there 570. Conservative, so cash on cash 270. So my offer probably gonna falling in between four, maybe 475, or not maybe not cross 500. Well, that's starting point, let's say. But you're not gonna make the offer right away to for this deal just by using this deal analyzer. This just to glance through the deal is the worth pursuing. It's a green deal. You might have to go to negotiate it. I would say it's green in the beginning, but after that, and everything is green for lender. It will pass, lender requirement. But then, as an investor, you might have to take a second look at that. Okay. All right. So that's it for today. And I will, every day I will do a quickly deal analysis like this for you. If you have any question about DSCR loan, you have scenario for me to run with you, you just reach out to me at the contact information in the description for today. Bye for now. See you next time.